Yo, it's your boy Crypto Blood. I wanted to let you guys know about this crypto conference coming up in October. Actually on Halloween. Come holler at me, hang out, chat, let's kick it. It's the World Crypto Con in Las Vegas on October 31st. That's actually Halloween. October 31st till November 2nd in Las Vegas, Nevada at the Aria Hotel and Casino. Come chill with me, people. If you want to learn more, check out www.worldcryptocon.co/cryptoblood. You should see that at the bottom of your screen. And also, if you decide to purchase, save a little bit of money, sign up with the promo code CBLOOD. All right, people, check it out. Yeah, it's your boy Crypto Blood. Welcome to another episode of My Two Satoshis. It is June 6, 2018. I'll give a shout out to my man XY. He wanted me to play this joint called Outlaw by Quakers. It's featuring Deed, and DJ Andy Smith is on the joint as well. I've never heard of this one. I don't know if this is a overseas UK artist, but nice old school flavor to it. So thanks XY for the song request. What's going on, people? Again, welcome to another episode of My Two Satoshis. Smoking on a La Aurora. This one comes in that gold tube. It's really aged, really good smoke, man. I'm enjoying this one here today, people. Got my coffee as well. And today we're going to be talking about two topics. One is an issue with Parity wallet. There's an update to fix some critical bugs. Wanted to cover that for you guys so that you were aware of that. And also, there's been a milestone hit or made with the SEC. They've actually hired an advisor to oversee crypto and ICOs and all that good stuff. So though I don't care for regulation, if they're going to regulate it, they need to do it in a better way than they're doing right now, because they're issuing really no real definitive guidance on how these companies should, if they choose to, operate within their parameters, within their frameworks, how to do that properly. So I think this is a good step if you're one of those who are for that. So we'll take a look at that as well. But first, let's take a look at that market cap. We're sitting at 339 billion. Got a little bump from the last day or so, but still, you know, not seeing what I want to see as far as price action. We never got to 79 or above 7,900 on Bitcoin, but for the 7-day view, we're still green for many of these coins, and deeply green for Bitcoin Cash. EOS looking well still for the 7-day, and I'm glad about Bitcoin Cash because I told you guys I loaded a boat 2 weeks ago purchasing mining contracts, so those are looking good. But let's look at these technicals really quickly. VeChain is up too heavily. Wow, VeChain's up 45%. I think that's from them launching their mainnet, I believe. It's a lot of mainnets launching actually, and I may cover that tomorrow regarding some things that analysts are saying in regards to, you know, competition for Ethereum. A lot of mainnets are launching. Tron, EOS, of course, VeChain, Zilliqua. I don't know if I'm saying that correctly, but I don't really follow that one, but there are a lot of mainnets launching, so competition is coming for sure. But let's take a look at this chart really quickly. As you can see here, we've bounced yet again. This is a very this 7,300 area, people. As you can see, we're bouncing off of it a couple of times, more than a couple actually, like 1, 2, 3, 4, 5 times just in the last hour. Though we've had a decent sell-off, but again, I'm indecisive until we see a break above 7,900, or if I'll turn bearish if we start heading back below 7,300. So just kind of in a trading range right now. I could draw lines here and here and it would look like a trading range. So let's see what happens. But the first article for today is this Ethereum software parity update that I wanted to cover for you guys. It came out earlier this morning. A critical consensus bug has been uncovered in a testing environment used by one of the two principal softwares crucial to the operation of the world's second largest blockchain, revealed last night by UK-based Parity Technologies in a blog post. The issue was found to cause those running the software to fall out of sync, meaning others using different software would not recognize their transaction. While the vulnerability was found on a test net, the worry is that it could be exploited on the main net as well. So as such, Parity is now urging all users to update their software to a newly patched version, and the publicly available data suggests the bug could have impacted roughly 30% of the Ethereum network. That's pretty decent size. But according to the representative of Parity, the issue was patched before it reached nodes operating the live Ethereum blockchain. Still, companies must update to the new software to remain safe from the vulnerability on the mainnet. It says here just 3 lines of code. Speaking with CoinDesk, Wei Tang, a Parity developer who assisted with yesterday's code patch, said that the bug is linked to a piece of code from Ethereum Improvement Proposal EIP86, formerly planned for Ethereum's upgrade last year. EIP86 aimed to introduce what is called account abstraction, allowing for transactions to be sent without a signature from the sender. The full Ethereum upgrade to EIP86 was postponed due to its complexity. However, Wei explained that Parity nevertheless implemented the code, possibly due to its role in Ethereum's upcoming consensus switch. So that kind of goes over that. It looks like it's been patched, but I just wanted to give you guys an update on that. If you're running the Parity wallet, I think you should have been prompted for that update, and I'm sure all of the major exchanges or any major software running the Parity have updated it as well. But I just wanted to let you guys know about that. Second article is more on the political side of things in regards to cryptos, and it says here, SEC Milestone, first ever advisor to oversee crypto, ICOs, and digital ledger tech. The Securities and Exchange Commission has announced the creation of a new advisory position, signifying an historical break from the emergence of cryptocurrencies and digital ledger technology such as blockchain. So Valerie Zespignik, I hope I'm saying that name correctly, has been named Associate Director of the Division of Corporate Finance and Senior Advisor for Digital Assets and Innovation for Division Director William Hinman. Appearing before the U.S. House of Representatives Subcommittee on Capital Markets, Security and Investment in April, Hinman explained that the SEC recognizes the merits of blockchain technology and acknowledged that entrepreneurs are finding that ICOs allow for a different type of enterprise, one that's more decentralized, which they think has some value. So the new advisory role for Valerie is in an effort to address regulatory concerns surrounding the integration of Bitcoin, ICOs, blockchain, and cryptocurrencies. One of the SEC's main stated goals is to protect investors. Of course, that's what they always use, as they operate under the guise of protecting us, but really just allowing the people with big money to profit from everything before the little people do, right? That's what we know. Article goes on to say, which has provided particularly challenging in a technologically complex space like cryptocurrencies, which are not always understood by policymakers. Numerous fintech companies such as Ripple and Ethereum are unleashing rapid developments and disrupting innovations, which are leading to strategic partnerships that are bridging old modes and methods with new models and upgraded protocols, allowing cryptocurrency ecosystems and blockchain platforms to infiltrate into mainstream banks and businesses. So the article goes on to say here, and I quote, that Valerie recognized early on the securities law implications of developments like blockchain and distributed ledger technologies and of cryptocurrencies, initial coin offerings, tokenized securities, and other digital instruments, Mr. Hinman said. She is a recognized leader in responding to developments in our markets. I'm excited to have her join me and the division's staff as the SEC continues to collaborate with retail investors, issuers, and other market participants in this important and rapidly evolving area. So that's good that they've hired her. As I've stated before, I'm not for all the regulation, but I know because these governments and these agencies are afraid of it, when they're afraid of things, they regulate things. That's how they try to contain a new technology, new innovation that they regulated. So it's to be expected. I'm not surprised. I think in the long run, it won't work. This is just their knee-jerk reaction, in my opinion, to cryptocurrencies, to blockchain, to a more decentralized environment that we're heading toward. So I think this is just their knee-jerk initial reaction. But in the long haul, in the long run, blockchain will really eliminate a lot of these agencies and the need for these agencies. So what do you guys think? Is this a good thing? Aside from, we know, most of us can agree that, you know, these agencies aren't good for blockchain because they're going to be here. We have to admit that. We can't run around that. We can't ignore that fact. If they're going to be here, it's best that they have someone or a division that solely operates within cryptocurrencies and blockchain technology. So let me know your thoughts on that. I'll definitely like to hear. So that's it for today's episode of My Two Satoshis, people. Make sure you guys jump over to cryptoblood.io, pick you up some of that apparel. We still got some in stock. That's it for today, people. It's your boy Crypto Blood, and I'm out. Holla.
Indicating early in the curve when wine is cheap and sour as vinegar.